Welcome to RAIN, the Real Estate Investor Growth Network with your hostess, Jen Josey. Join like-minded real estate investors and accelerate your business towards greatness. You will hear step-by-step strategies for success, interviews with real estate rock stars, and we will dig deep into past projects where we bear it all, including the good, the bad, and some just plain ugly. So get excited. Here's the bestower of badassery herself, the real Jen Josey. Listener discretion is advised.
Hi, and welcome back. I'm Jen Josey, creator of RAIN, the Real Estate Investor Growth Network. Whoop, whoop. On today's episode, we have a guest that will be sharing their badassery. But before we begin, here's today's badassery bestowment, my little badass gift to you. Today's topic is why every investor needs a property inspection, no exceptions. Thinking about skipping the inspection to save a few bucks or speed up closing? Whoa, RAIN Nation, do not fall for that rookie mistake. A professional inspection is your secret weapon to protecting your wallet, your sanity, and your investment dreams. Here are 5 reasons why you never, ever want to skip this critical step. Number 1, uncover hidden nightmares. Surface level charm can hide big problems. Think faulty wiring, mold, foundation cracks. Inspectors spot what your eyes can't. Number 2, get real about repairs. An inspection gives you a detailed, unbiased repair list. Now you know exactly what you're dealing with. No guessing, no wishful thinking. Number 3, leverage for negotiation. This one's my favorite. Found some issues? Use that inspection report as ammunition to negotiate a lower price, request repairs, or even walk away if the deal turns sour. Number 4, plan your budget like a pro. Surprise expenses kill profits. Inspections help you forecast costs accurately so you don't blow your budget on hidden fixes. And number 5, protect your investment and your reputation. Skipping an inspection can turn your dream deal into a money pit and your reputation into a cautionary tale. Due diligence is the mark of a true badass investor. So RAIN Nation, remember, inspections are not optional. They're your first line of defense against disaster. Protect your future, protect your profits, and keep stacking your badassery. Now on to today's episode of the Real Estate Investor Growth Network podcast. Today's guest is Phil Ganz, the president and founder of Next Wave Mortgage. With more than 25 years of industry experience and over $1 billion in personal loan originations, Phil is a true expert in both residential and investor lending. He oversees a digital ecosystem of more than 50 real estate websites and hosts the Make Florida Your Home podcast, where he shares insights on smart leverage and building wealth through real estate. Originally from Newton, Massachusetts, and now calling Jensen Beach, Florida home, Phil is also a proud new father who's passionate about helping others achieve financial freedom. It's my pleasure to have him on the show, so welcome, Phil Ganz.
Oh, thank you so much for having me.
Absolutely. We had a good time chatting before we hit record, so I'm really looking forward to this interview. So give us a little background before we begin on how you got involved with mortgages.
Oh, wow. That's a great story. You know, I went to Ohio Wesleyan University and I just wanted to save the world. And so I was going to do the Peace Corps. That was like my mission.
Oh my
in life,
goodness.
just to help people, right? I didn't, even though I majored with economics, with management, all I wanted to do was really help people. And so I had qualified and I was accepted in. I was actually going to leave, I think it was like February, I want to say like 12th, 2001. And what happened was you had 9/11 and obviously, September 11th, 2000. And, when I graduated in December, at that point, I was working at the Chinese Progressive Association. I was actually helping people pass the citizenship exam.
Nice.
Chinese people. This is just being like straight up. And at that point, even though the Chinese people had nothing to do with 9/11, right? It was incredibly hard for them to become citizens because they were, people would, the people administering the exam, there's an oral component where you have to have a conversation, and they would get them to fail, like to shake their hand and say, what color is the window, which is just nonsense. So I was working there, and I was waiting for my deployment, but it got canceled. So between February and when I finally got my first job as a telemarketer for AmeriQuest Mortgage, and that was May 7th, 2001. That was my first day at AmeriQuest Mortgage.
Wow.
I know. So
And you were a
that's how I started.
telemarketer? Telemarketer?
What? I was a telemarketer. And in fact, the job market was so bad. I was talking to my dad, who was just so disappointed in me. He's like, why was he so disappointed? Well, as opposed to becoming a physician like him, I said, I'll save the world and do Peace Corps, which obviously you can't predict 9/11, because if you do the Peace Corps, then you would, get your MBA, and then like you'd get into business. So I had two great jobs. It was either do collections, which is an awful job, or be a telemarketer where you get a small base and you make little commissions. So I decide, well, I'll just do this telemarketing job. And the only thing like more disappointing was, and just put it in your perspective, that it was like a little bit, even though it was a clean cut, like my mentality was still like a hippie, like save the world. And the guy didn't even, my manager, Paul Kelly, didn't even want to hire me. Like the life was so disappointing. And you're like, well, how do you know he didn't want to hire you? Because they actually sent me a rejection notice. And you're like, well, this is horrible. And it was like thin. And I called up HR. I'm like, why are you rejecting me for poor credit? And then they said, they're like, oh, we gave you the wrong rejection notice. You have excellent credit. I'm like, well, what are you rejecting me for? They're like, we didn't think you're good. And I'm like, well, I just started talking over and just having a conversation. And then she's like, fine, we'll give you second interview. So I go in for my second interview, and then the guy didn't shows up. It was a Friday, and he calls me Friday evening and says, you're hired to show up on Monday. But I did show up, and he wanted to just like fire me the whole time. And I was just like a really good telemarketer, and there was like no training. And I'm like sitting there just calling people. It's like, you want to just like refinance? I didn't know what refinance was. So that was like my story of like, and a build me that I always cared about people. So even though I didn't know anything, what resonates with people is if you actually care, you can't fake caring.
Right.
And they probably realized a couple of things. Like I had no idea what I was talking about, but they realized I was there to help them. So I did transition from glorious position of telemarketer to loan officer. And then I became eventually a branch manager. I went from living in Boston to Connecticut. And then I said, I just can't work for a company like this anymore. People don't know. AmeriQuest Mortgage was one of the subprime lenders. And once I realized what it was about, no matter what, I didn't want to do it anymore. I'd do anything besides do this. And you say, why? Because fundamentally, you'd give someone a 2-year arm and a 3-year prepayment. And that was fine. But we were under the impression that they would refinance with no cost and give them a low fixed, and you would help America out.
Right.
And that sat well with me. But you said, well, how did you discover this wasn't the case? Well, I was on a President's Club trip in a pool in Hawaii, and there was a division called portfolio. And the portfolio, I said, you guys have it so easy. You just give someone, this little fixed rate after I do the hard work. And they all start laughing. at me like I'm an idiot. I said, why are you guys laughing at me? And they said, Phil, it's the same thing again. There is no magical fixed rate. And right there, I said, I'm done with this company.
Gotcha.
No, I
Wow.
did stay for the rest of my trip because I'm not going to like redo it. I did, for full disclosure, enjoy my trip. But when I came back, that was essentially the beginning of the end of Phil Ganz at Ameriquest Mortgage. I then worked for a small independent mortgage brokerage called Partners, and that was good. Being a mortgage broker was like way different in the year 2022 than it is in you know uh, it's so many years later, right? It's just things of 20 years later, things evolve. Like you have to go to their house, and like you couldn't do things online. And then that brokerage was growing because it actually had an advantage. It offered really low rates and had a lot of programs. So it grew, and then it sold to a small company, a small, medium-sized lender called Mortgage Network, which is actually now randomly owned by Movement Mortgage. Um, but then what happened was in '07 it crashed, and
Right.
I was a sales guy there, but I was still finding my way, and they fired me. Yeah, I got fired. And as a sales guy, and people don't know this, like I wasn't really a big producer at that point. Um, and I got fired. And so then I was researching a company that no one ever heard of. And now the company is really big. But at the time I was either the second or third hire in the
Oh,
East
wow.
Coast, and the company almost even collapsed then. The company is called now Rate.com. It was then called Guaranteed Rate. And my manager, who is a good guy, his name is Nick Anisu. I'm mispronouncing his name. Sorry for all the Greek community. I'm dyslexic, okay? And all the Greek people are very furious with me right now. But he's second in command of Rate.com.
Wow.
And he's a good guy. His brother, I think, runs New England. He's also a good guy. They gave me an opportunity, and and I built a little business. But you run into sometimes it's time to try something new, right?
Right.
And I did. I was researching, trying to find the right fit because I believe you need the right horse, but you also need the right jockey. So I had actually kind of informally interviewed at a company called Fairway, and I said, you know, I like the company, but I said this manager person, not the right fit. And then I interviewed with another manager, and his name, and I interviewed like I met him at a coffee shop in a hotel. His name was Dave Lass, good guy. Uh, his family owns like Laz Parking. So, but they're all very successful, but he's a great guy. And I interviewed him, and I remember saying to him, and I said, yeah, I'll work. He's like, this is the quickest interview right away. I'm like, yeah. I'm like, you don't gotta, if you got Beyonce, you don't have to go too long. You just kind of know. And so at that point, you know, and this is for, any, person that is not, you know, succeeding in sales or struggling as a loan officer, you got to get the right manager. At this point, Dave
Yeah.
was a branch manager. He is
Yep.
now, I think, the president of Fairway,
Wow.
right? Or yeah, I randomly, I'm good at picking out people that will be very successful later in life because I did pick out Dave, and I knew it, I've actually done this many times and even other things, but Dave was bound for greatness. And I was a small producer, and I said, as a small producer, you don't get paid a lot, right? I think it's even real. So I was getting, I think like 80 basis points, but I had convinced this other loan officer that was also not a big producer. I said, look, I have an idea. He's like, what's your idea, Phil? I said, okay, we'll pay you. I'll give you like 25%, And, and I told Dave, look, this for a couple of months, I'm dyslexic. I'm like, just pay him a little salary. I'll do some deals. I'm like, you got nothing to lose. So we end up going from like doing like, say, 6 or 8 million a year in 12 months to like 20 million.
Wow.
Which was good, right? And I knew it was onto something. And then I go from like 20 million. And there was a thing, this is the craziest story, that 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 if I had done next year, Dave likes to set goals. And this was a really good lesson in life. And I'm going to tell it to people. He said, if you can do 40 million, then you can buy one, I will sell you at the market price, one share of Fairway stock. This is like many years ago, right? I had worked at Fairway 9 years. This is at the beginning. And I think, just so the viewers, I think the one share was worth like 40,000, right? So I was going to invest 40. You're like, well, what's the share worth when you left Fairway? I don't know what it's worth today, but it's probably worth more. So I can tell you, worst case, this one share is worth $1 million, right?
Wow.
Just so you know what's the stake of this conversation, what it is. Now, I didn't know it would be worth what it is today. But I believed in Dave, and I did believe. I knew the owner, Steve, these guys were going to do something, right? You just know when you're on the ship that's going to win, you just know, right? It didn't matter with these guys. They could sell donuts. This thing's going to win, right? And so I believed in Vince, and we were off to a slow start. In fact, in February, Vince is like, dude, he's like, working for you is the greatest diet. I'm like, why is it the greatest diet? He's like, because I'm starving. Yeah. And we got off to a slow start, right? We really did. It's like starting the football year 0-2. And that's why, even though Miami didn't win the championship, they were equally as good as Indiana. I mean, it came down to the last drive. And a lot of times things do. And look, by September, we were at I think 28 or $29 million. So we had picked up our pace considerably. Because in February, if you'd only closed one deal, we picked up our averages, right? And so I said, hey, you think we're going to do the 40 million? I said, yeah, we're going to do it, right? And we come all the way down, right? And it was December. I was in the pool, and we actually had the 40th loan close for over the $40 million.
Wow.
That was set to close. I think it was 11 a.m. on on December 31st, and I get a phone call, from the closing department. I go, what's going on? And they're like, you're not gonna like this. I'm like, what happened? Is the buyer so excited? Loan qualified, like 2018. They're like, yeah. They're like, we forgot to send out the CD, and that was the first year of trade. So the loan didn't close, and I didn't hit my 40 million. So no, I didn't get the ability to buy. But that was a start, because from there, that loss was really good. And I'll tell you the reason why. The lesson is, you don't let things be close. And if you let things to be close, that's on me.
Yep.
I blame no one. I'm very thankful for the opportunity to compete. I didn't win that year. It was actually, looking back, it was the best thing that ever happened to me, because it definitely, I said, you said, what happened the following year? I'll tell you what happened the following year. 70.
Wow.
It wasn't you said, why wasn't it a double? Because then you got to start to build infrastructure. So then it went 70. Then my priorities changed. Me and my two buddies started a branch. And then, within, 2-3 years, I was at 143 million just doing purchases. And our branch was over 500. It was the number one branch. I had broken every record at Fairway New England. I still own it today. I owned a record for purchase, volume, units, purchase volume. During that big boom 5 years or 4 years ago, I had done no refis. I was just doing minimal refis. I didn't even care, because I was kind of overwhelmed. But I then, at the top of my career, left Fairway. I actually went from Fairway Boston to start my adventure with my partner, who was my assistant at the time that became my partner. We went to Key Largo, Florida. For people who don't know, there is no refinance. There's no business in Key Largo, like none. Like it's all either flood zones or like
That is true.
rich people, or if you find someone low to moderate, they're buying a trailer park. And there's no like real deals there. Like, and so I really like struggled. I had my Boston business. I was on an island, and then my wife asked for like a divorce. Like
Ah,
it wasn't going well. Okay. And I'm like, oh man, what am I gonna do? And then I'm like, I'm like, I need a new opportunity because in retail, you're not like you own like areas. People don't realize this. It's like a franchise, right? Like you can't put like you're like I couldn't put like an office in Fort Lauderdale because they had a Fort Lauderdale. And people are like protective because that's how they're recruited there in the first place. It's just the way it is, right? It's not good or bad. It's just like every retail place, you just have these it's just franchise. And even though it's not theoretically a franchise, they're just a bunch of Chick-fil-A's. That's a good way to put it, right? And so you just, even though it was successful and I had a track record of being successful, so then I'd gone to movement and I did get an opportunity there. It just didn't work out. Sometimes it's just a culture fit. Great company, great people, really good people. But things don't always, they just don't always work. And I'm not going to blame anyone. It's probably on me. I'd gone through a lot of divorce, and it takes a lot. Just going through everything, and even with my partner breakups. Because remember, I lost two partners. Like I had like two divorces. One was my partners in Boston, which I lost them because like companies don't like they don't want to create super teams because then you'll start your own company. Like why
right.
not? Because you get the
Yep.
volume, right? People don't realize this with the economics of mortgages. Like why would you allow people to start super teams? They don't. They'll recruit super teams, but they don't want to like they don't want you to do like 100 billion. This is not good for them, right? Because eventually you'll just roll away, which is true. Like why wouldn't you? And then me and my partner started Next Wave Mortgage, but it wasn't right away. It took 6 months to start because I wasn't sure what I was gonna do, and I said, you know what, we want to give back. We want to focus in on first time people. We want to help out the low to moderate income families, including investors that are first time investors.
Good.
This is the big thing for your audience. We wanted to help people go from low to middle class to upper class to rich. And there's nothing wrong with being rich. I want to let people know this. If you can be rich, I'm not rich, but if we can get you rich, that's good, right? We want you to win championships, right? And I think that's what it's about. It's about winning championships. What are you talking? It's not about the money. It's about the journey, right? I mean, you want to win the trophy, right? This is what it's about, right? This is why you're going to ultimately do it. Because when you're 47, you cannot do Little League anymore, right? How are you going to win? And it's a great journey to be able to buy a home, especially if you're doing it, if you're married. It's a great journey because that's your teammate. People forget about who's your teammate. It's your wife. This is true, right? And this is actually something great to go about. And that's why I kind of view, first time buyers and even down payment assistance as a first time investor, right? People say, well, what's a first time investor? I said, well, it's when you buy your first home, because that eventually can become your first investment.
Well,
And
I want to direct this conversation to the DSCR loan, which is a product that a lot of investors, it's fairly a newer product that came along for investors specifically. Would you agree with that statement?
oh my God, yes.
Yes. Okay. That's like our biggest struggle is getting the financing aligned. And once I get a property under contract, I'm like, first thing who's going to be financing this? So I love that you put that whole personality behind it. But the number one product that a lot of people are using now is the DSCR loan. So I want you to break it down like I'm a second grader and explain why this is such a great product for investors.
Oh my God. When I learned about this product, it was amazing. It was so good. My brain couldn't understand it. So I'm going to break it down, right? So here's the basics. It stands for debt service ratio. And what banks typically want, and this is it, they want the rents to be equal or more, hopefully more, than your mortgage payment, including your taxes and insurance. I know what
Yes.
you're going to say next, but my income at my job, we don't care about your job. This is like the biggest thing. All they look at is the property. They're making an investment into the property. They don't care
And
about
your
you
credit
now.
score, though. You do have to have
And
a
a
good
credit score.
Yes.
So there's a minimum. There's a minimum that they look at, right? You know, you typically want at least a 640 credit score. If you have a 680, even better, right? But it's not like that. The credit isn't like that as more difficult. And what I mean by that is in conventional financing, you typically have to run the loan through DU. And this, but they just want the minimum scores. So you could have a 700 in conventional and not always get an approval because that's the minimum. But when they have the minimum here, it's really the minimum because all they really care about is the property, right? And you can do these as little as 15% down. Now, what I've discovered, they've worked better with 20 and even better with 25. But the secret is people don't even know that these rates right now are equal to that of primary residence. In some cases, they're less. There's a misconception that primary residence rates are lower than investors. Let me just give you an example. Yesterday, I was doing a 20% down where only the rent equaled the mortgage. The rate,
So a DSCR number of 1.
1.
Yeah.
That's it, 1.0. And we wanted higher than 1. The rate was right around like 6.25.
Wow.
You said, what's the primary residence rate yesterday? It was probably right around 6. So what we've seen is that the investor rates are getting tighter to the rates
Retail.
of primary residence. And let's look at it because they're less of a risk if the tenants rents equal or exceed that of the mortgage. It's a very low risk.
Well, I have a quick
Right?
question. I'm going to interject here because you said sometimes 15% down, 20 is better, 25. I'm just curious. So I bought a beach condo recently and I got it way under market value. So the value is say closer to 525, 550, but I got it for 399. To do a DSCR loan out of the gate, they're taking the purchase price. Then you have to put your 15, 20% or whatever it is down from that. Why are you not looking at the equity of the property at time of purchase? I'm just curious because this is
That's
like
a great.
it stumps me every time where I'm like, I kind of want them to ask for more so I get a higher loan. So I have to come less out of pocket is my point.
I could, I wish the banks did it that way. But look, it's like playing, blackjack. The odds are in the casino's favor, right? They don't want to have to explain to their investors that they didn't get the best deal or there was a risk. They assume that there's a supply and demand, right? And if it was really worth that, then someone else would have paid that, right? They assume the market is more than one person. So, because if you put it on fair market value, you'd have more than one people and it should be pretty close, right?
All right.
But you're right. If there's a huge difference, people will approach it differently. But I will say, if there's too big of a difference, then sometimes the bank gets a little suspicious. Because they're like, why? If it's too big, why is Johnny getting $200,000 of equity today? What are we missing?
Gotcha.
Right? They say that they don't, but if the speed limit when you're driving the highway is 65 and I'm going 45, the police officer is, why is this something wrong with the car? Right? So that's what I
Well,
would say. I wish it was different, but congratulations if you get such a good deal.
well, thank you. So I had to buy it through a hard money loan and do a little bit of fixing up to it so then I can force appreciation. So now when I do go to refinance it into a DSCR loan, now they're looking at the appraisal number. So that's really how I had to do it because I didn't have 25% to put down on the property. And typical DSCR loans don't allow second positions. I work with a ton of private money lenders. In fact, one of my favorite private money lenders is down in South Florida where you are. But a lot of times they won't let you use private funds to fund that difference when getting a DSCR loan. So what's up with that? What's because that makes it tough for us who leverage everything.
Well, I can tell you, I actually do DSCR second mortgages.
Explain that. What does that mean?
So what happens is sometimes, right? Say I give you a really low rate of, like, say, 6.25 or 6%, and then rates go up, right? For whatever reason, or that's typically what happens. You don't want to touch this low rate mortgage that I just gave you. And the one thing I will also say on DSCR loans, one of the functions or features are prepayment penalties. And I want to actually explain this because I think this is really important. So a lot of these loans, they want you to stay in them for a couple of years, right? The sweet spot for me is 3 years. A 3-year prepayment penalty typically works on a step down, where your first year you have the highest amount of prepayment.
And what's a
The
typical
banks want to
prepayment? What does
guarantee.
that explain what that is? What does a prepayment look like?
So what a prepayment is, say it's a $100,000 loan, right? Just to make the numbers easy. Your first year, if you get out of it within the first 12 months, you would owe the bank $3,000 extra of interest.
Gotcha. Okay.
The second year you would owe 2,000, and the third year you'd owe 1,000, because the banks wanted minimum interest for their time to, like, lend you that. And people think, well, I shouldn't get a prepayment penalty. Well, if you opt out of the penalty and you don't guarantee anyone anything, your rate goes up. So
Interest.
sometimes
Gotcha.
you don't want a prepayment penalty to say like 10 years or 5 years. But if you strategically, the sweet spot where the numbers work is 3 years. It always is for investors. As someone that's a mortgage broker that shops over 100 different investors, I can tell you 100% with confidence, 36 months is exactly where you want to be. Even if you plan on getting out in 2 years, there's no savings, because if you did it 2 years, your interest rate wouldn't have been as low for those 2 years. So you still paid for it anyways.
Gotcha. So a typical DSCR loan is a 30-year fixed, correct?
Correct. I only like to do 30-year fixes. You
Good.
said why? They price better
Yep.
for the bank and the customer, and they know what they get to. I've seen this, and I will tell you a crazy story where people make horrible mistakes, right? Where people make horrible mistakes is they actually don't even understand, and this is really important, the type of DSCR loan they're getting. And I need to explain this. So the type I do is called standard vanilla, right? I give you the loan and you never have to submit your tax returns ever. And there's certain DSCR loans, the craziest thing, and I'll tell you a story on this. This will resonate with your viewers, that every 12 months, and I'm in one of these right now, and I was a first time investor and I didn't know. Every 12 months, I have to submit my tax returns. And you say, why? Because if the numbers don't cash flow, the bank will either make me put down more money or they'll ask for their money back. You're like, I don't understand, but you paid the mortgage on time. Yeah. the deal always has to make sense for them every 12 months.
Huh.
Typically, you see this with local banks. So they'll put it on an arm. That's why when people say arm on these loans, you're gonna lose everything. That's why we do 30
Explain what
year.
an ARM is, because there's like a 5-year ARM. Explain what that is.
Yeah, so an ARM stands for adjustable rate mortgage. It works on a margin plus an index. The margin is a fixed number. The index could be LIBOR or anything that these guys come up with. I swear they come up with new indexes every single day, right? And it's ridiculous. And it can go sky high. They'll tell you it can't. And even Gemini and your chat GBTs sometimes will tell you, oh, go pick the arms, right? Bad mistake for a little bit of money. It's like football. Investing is like football. The team that has the least amount of turnovers is most likely the winners. The highest predictor of a stat is turnovers. So your goal is not to lose the game, right? I mean, I'm a Patriots fan, and we won the game because we played the Texans. And CJ Stroud, this is an incredible stat. His quarterback rating was 12. And that's why the Patriots are playing the Broncos. If he had just spiked the ball every single snap, he would have been a 39. I don't understand. Yeah, so if you put me in quarterback and I just spiked the ball, I would have been a 39. He had that many interceptions.
Ooh.
I think it was 4 in the first half. And that's, as an investor, your goal. And I like to save money. I totally get it. I'm a member of Costco, right? I lead Florida in Amazon returns thanks to my wife. I get it. But where you don't want to save money is getting the wrong type of loan. So I tell people, you're going to get a 30-year fixed. You're going to get a standard vanilla, a DSCR. I'm going to give you a 3-year prepayment penalty. You're going to get a super low rate, and you will not be redoing this. So when did you learn about this? And I'll tell you this to the viewers. When I worked at Fairway Mortgage, they had one guy, right? And this is right at the time when they had this state licensing thing, right? And you ever see the movie Wolf of Wall Street?
Yes.
Okay, Jordan Belfort, right?
Mm-hmm.
Well, Jordan Belfort's boss for a short period of time, who hired Jordan Belfort, worked at Fairway Mortgage.
Oh, wow.
He said, well, where's this guy now? The reality is that I didn't work with him, but other people did. So then I called him. This is actually good. He said, well, what happened to this guy? Well, see, the thing is, he couldn't get licensed at Fairway. Why? Because he had gotten in trouble. This is facts. But you can get licensed at a bank because you don't need a license. You can just become a registered agent. This is true, right? And he told me the story. He's like, yeah. He's like, I had 25 million. I'm like, okay. Because I'm thinking if I have 25 million, guys, I'm not even investing. I'm just going to keep my money in a million banks and FDIC approve it. And I don't even need a risk. I can't even spend 25 million. This is ridiculous. Such a ridiculous conversation. I don't need 26 million. 25 is good. And you're like, what happened? And he said to me, well, I took my money in New York City and I put it in all these places. And what happened? And so you took the 25. And remember, you get commercial loans, you put 25. 07 happened. You're like, what happened in 07? The values crashed. And all the banks said to him, you need to put in some more money to stabilize all the properties. He said, well, what happened? He didn't have the money. Wow. What happens next? Bank took property. What happened to him? He lived in parents' home doing mortgages. You're like, that's part 2 of Jordan Belfort's Wolf of Wall Street. Boss lives in parents' home doing mortgages in New York. That's it. And I asked him, I said, why did you do this? He's like, people like me don't know when to stop. And I'm like, too bad you're not like me. I'm like, I would have stopped. He's like, well, you weren't not like me.
Wow.
I mean, the guy's literally living in 1982. But that's what happened. By the way, 25 million in 2007, if you look at the inflation, is like 50 million today.
Right.
So if I say to you, if you had 50 million in the bank, do you really need to keep going?
Right.
No. I would advise people at some point, if you do have 50 million, all these people get fancy because they're doing trusts and I'll keep on inheriting the kids. And I totally like get this wheel and deal and have like some like lineage. Okay, you know what? Here's the Phil Ganz plan. I got 50 million. I'm gonna put in gold bars, and that's it. If my gold goes up, that's fine. But I'm not. You don't have to. You don't have to like Atlanta Falcons this thing, like the 28-3, the throwing the football, right? This is literally it. That's how I actually came to Florida. I went to the Super Bowl. I'm like, oh, this Florida thing's pretty cool. And I'm like, why are they throwing the ball? What are these guys doing? And it's you don't have to, but that's what happened. And this is a real story. People don't know when to stop.
Right.
And I do think that people, before they start, you say to yourself, everyone needs a number. You write down the number. I don't care what the number is. I have a number. You're like, what's your number? 20 million. You say, why? Because the guy in Wolf of Wall Street didn't know what to do at 25. So I made mine 20 just to make sure that I know when to walk away.
Well, I want to go back to this DSCR loan here, and I want you just to clarify something before we go to the second part of the podcast here. You said the DSCR loan, do you have to do the 12-month, is that included in a 30-year fixed, or is that just the ARM type product?
Well, if every 12 months, and I don't offer those loans, those are only offered by commercial banks, right? And that's where kind of like DSCR loans like originate, right? Like that's like the history. Banks would do these. Then like Wall Street's like, hold on, we can collateralize these and do 30-year mortgages and not have to deal with this and get it off our
Gotcha.
books. See, once Wall Street realized how to get it off their books and share the risk among everyone's 401k, they didn't care anymore. See,
So
the local banks only care because it's on their books and they got investors. They're people,
so
right?
this
That's why.
the standard vanilla one that you're talking about, you are locked into that rate for 30
All
years. That's
30
just
years.
that's the question I was getting to. Yes.
Yeah,
So
it's all 30 years. It's
it's
so brilliant. Even if you blend and get rough in 5 years, I would always do it because you know what you get. You know what you have.
right.
You know your
Perfect.
numbers.
Excellent advice for the listeners. I think that is that's great because we did a DSCR on 3 of our properties. We did a portfolio loan, and that ARM came up, and whoo, those rates changed, and I was like, ouch. And I didn't even think, honestly, I don't think when we first financed them that they even offered the 30-year with the DSCR. So we are looking to refinance that, but
And it actually gets worse. You see why? Because in commercial lending, they'll give you an arm that's equal to the prepayment penalty,
whew,
but instinctively you don't want to hit it. So then you'll refinance before. But
yep,
what the banks do is, I'm going to tell you a dirty trick. What they do is they don't wipe out that prepayment penalty. They add that to the next
ah,
loan. You're like, really? Yeah. So on my I had a 3-family property that I noticed this with. They had me in a massive 5-year prepayment penalty. And I got down to like 2 years left and they had me. I said, fine. I didn't even care about the cash flow anymore. I said, screw it. I said, I'm doing a 15-year fixed, right? Which is fine because it's like paying off the loan. But I have to explain to my wife I'm not making as much cash flow. But my mortgage balance is going down. But
yep.
there's really no way for me to, because I've kind of like maxed up my rents, especially in this cooling market in Boston for the next like 5 years. So, the worst thing, look, the good news is that my prepayment penalty in June of this year, I got like 3 more years. It's like, it ended up being awful. I don't like these massive prepayment penalties. And this is why we offer standard vanilla DSCR loans.
I love that. Well, I appreciate you explaining it to us and really personalizing it as well with all the behind the scenes and what banks are doing. And you gave excellent, excellent advice. So we are going to move to the second part of the podcast here, Phil, and the what makes Phil Ganz a badass. And I use the acronym badass, and the first letter is B for book. What's a book that's made a huge difference in your life?
The book I would tell everyone is Atomic Habits by James
Yes.
Clear. I think that's like a great book. You know why I like that book? Because that was the first book that I had read in a long time that I really enjoyed and wanted me to read again.
Yes.
Sometimes when you graduate college, you get burnt and you don't want to deal with things. But a good book does two things. One, it teaches something.
Yeah.
But two, it gets you excited to keep on going. And I
I love
think it
that.
does something really good. And I just learned that he came out with a workbook
That's right.
because I think that's great that you can share this knowledge and really go in depth. And
Yeah,
I
that.
think that's something where people make a mistake that you can only read a book once.
Mm-mm.
I think sometimes you need to read a book many times. It's better to read 10 books 10 times than 100 books once. And I know what people will say, well, the more books you read, the better. This is such a ridiculous statement. It's like, obviously, you want to read a lot of books, but you need to be able to really understand the information. I mean, if
Correct.
you look at the Bible, you think, and I'm Jewish, you think the rabbi only reads the Torah once? You think the priest only reads the Old Testament once?
Right.
No, they think they have the best book and they read it many times. I mean, the Muslims these guys pray more than anyone. They read it a million times. And so
They
if you read
memorize
great
it.
books,
Yep.
that has to become your Bible. So in a world of swiping and trying to, and I see these ads for these book companies, you can read 490 books in 3 days. And I'm like, what type of crap is this?
Well,
you
I think that's
know?
a great perspective because you're true. I just am going to tack onto that and say those 10 books have to be good books, though. You don't want to read garbage, waste time reading it 10 times.
And, and,
But
and that's
agreed.
America today where people want to swipe so much. Take your time and then research the right book to read and then enjoy it.
Yes. Well said. Very good. All right. The first A in badass is for advice. You've given us great advice on these DSCR loans and a lot of behind the scenes here. I'm curious, what's the best piece of advice you've ever received?
The best advice I would, that I've received, and I've gotten a lot of great advice, you know, is just, I would say it's just you can't give up in life. And you got to take big risks.
Risks. Huge. You got to step out of your comfort zone, is really what it is. Yeah.
You really do.
Yep.
And you got to take big risks. They got to manage these risks, as I've learned. You don't want to Atlanta Falcon this thing, but you you got to step outside your comfort zone and you got to grow. Life is too short. I tell you a fear of mine, because you asked me what's my biggest fear is came from a movie, Glengarry Glen Ross, when they're at the bar and the guy's having a drink and they were talking about taking chances and risks and all of this, and he just didn't want to say what if. I'm 60 years old and I didn't go for it. I didn't try. And I would advise someone, you don't want to be that guy.
Right.
And that was always scaring with me, saying, someone said to me, you could just move to Florida when you're old and do it with no risk, because I left when life was, life was good. I was making the most money I ever made and I ever dreamed of making. I made money I didn't even deserve. I felt guilty of the money I was making, but it was never about that. For me, it was always about winning, teamwork, and trying to win a championship. That's what I think it's about. It's more of the journey of trying to do it, the championship. And that's what I challenge everyone today is try to win a championship.
I love it. I love all your football references. They're cracking me up. So, all right. The D in badass is for drive. What drives you to be successful?
Boy, for me, it's trying to prove people wrong. I was born dyslexic with learning disability before an era before everyone knew what this was,
Right.
right? So when you had it with gray hair, if you know, it's like it was way harder to get determined of this. In fact, it was so hard that it was so apparent how much of a learning disability I had in dyslexic that, the school said, they said, look, if you sign this waiver, it's a funny story. They're like, if you sign this waiver, we'll let you, go to a private school and we won't pay. This is the thing. They're like, you just promise you won't sue us. But it was so apparent. Like I failed I get lost in a parking lot and I can't find my car. I didn't even almost want to drive because just when I got my license in the year 1995, that was the first Garmin that came out. I'm
Ah,
so dyslexic. I always get lost. So I think, and if you have a learning disability, you gotta look. You're gonna. A lot of people say no, and you prove people right. And I think that was like the beginning of wanting to tell people that you can do something because you got to earn it. You got to prove people wrong, and that really came. You know, look, especially when you're older now. When I grew up, you know, it was okay not to be nice. You know, it was way like in terms of like people way through more like stupid and all these things in school that you cannot even teachers saying and all these things like totally not appropriate. And times have changed. I gotta say, it's not that they were like bad people, but what's socially acceptable today is totally different than in 1995 or
yep.
1990. If what I went through happened, people would get blown out and fired on the spot. But it created, it's kind of like a diamond. It makes it hard, right? It makes people tougher, right? What doesn't kill you makes you stronger.
Right.
There is something to that. That this it does create some resilience. You do have to overcome things. And randomly on my partner that I hired, that led to a lot of the growth. And I got to give him credit. His name is Ryan Scarrett. He said, "Why did you hire me?" It was an interview, and we were a growing little branch, and everyone wanted to hire someone else. And I said, "No, I'm going to hire this guy." He said, "Why did you hire this guy?" Right? I hired him because he went to the same high school I did, Landmark High School. You can look it up. It's in Beverly, Mass. It's for kids with learning disabilities.
Oh,
True.
wow.
So I went to a school with kids with learning disabilities. A lot of people are like, "Oh man, I'm," you said it, it's hard to say when someone has a disability. And I feel truly blessed that I was able to go. My grandparents were, they made it possible for me to go. And it wouldn't have been financially possible if it wasn't for my grandparents. So I'm always very thankful for my grandparents. And that was also really hard for me because my brother and sister were like A students. These guys got like 1,600 on their SATs.
Wow.
They may have missed one, but it's irrelevant. My sister went to John Hopkins. I
Wow.
mean, so my brother he was pre-med at University of Rochester. He eventually went to BC. I think he was training kids on the SATs. These kids, and to sit there, dyslexic, it was, but you know what I will say with coaching? Landmark was able to coach me from this is so horrible, a 7:30. When I was at Newton Sound, I got a 7:30 on my SATs, which is, I think, this is spiking the ball comparison. You get 600 for writing your name. So within 2 years or year and a half, I went from 730 to 1190 on my SAT.
Wow.
So at a conversion, remember it's there. That put me in the 84th or 85th percentile. So I went from like second percentile of, I thought I was gonna have to pump gas, for a living to, I was able to get into a bunch of colleges, right? So sometimes with the right strategy, the lesson you can take away from that is if you get the right strategy and the right mentor, you can do some good things.
Absolutely. And never give up. I love that. Thank you. All right. The second A in badass is for aspiration. I'm a big goal setter. So what is a goal you are currently working on?
My goal is to help other people.
I love it.
You want to give back. Do I want to grow the biggest growth next wave? Of course we're growing. We keep on, but we grow through other people's success.
That is fantastic.
It's not about growing, this way, which is why a lot of companies want to go horizontally. We want to grow vertically with the right people. We want to see other people's success. And we've actually have done that. And that's what I would say, well, I'll define my success is through other people.
Love it. All right. The first S in badass is for systems. What systems do you have in place to help you achieve success?
Boy, that's really good. I'm really disciplined. And I got to tell you, I'm a little bit of old school. Every single day, I write down on a pad of paper what I need to get done. And I rewrite it every single day. It helps me remember.
Yep.
And I use my systems to help people with dyslexia and ADD. So I do a lot of writing things down and remembering. I do use the technology of Excel and these systems, these fancy things that like remind me of things of calendar, but I will never give up a pad and paper because that is what can make an impact.
I'm with you.
Yeah, it makes an impact.
Yes, it does.
Right? And I think a lot of young people forget it in because they don't go deep of what's really like important. So you got to write things down. You got to slow things down.
Awesome. All right. The final S in badass is success. What does success mean to Phil Ganz?
Boy, success to me, if I had to define it, like obviously we want to help like a lot of people, but we want to grow next wave eventually into a national company through the success of our people. So I would define it as creating a path for people to be extremely successful and get the support they need. And what makes us different is that we provide a lot of organic customers to our loan officers. And we will become the Zillow of Florida, Texas soon. We're licensed in 11 states, but we're expanding our footprint. But we have a great SEO and lead conversion strategy. And so I'm really excited about that. And that's one of the reasons why we did start Next Wave Mortgage.
Well, we did not even get into because our conversation went sideways there, which was great for the listeners to learn more about the DSCR loan. But how do the listeners find you if they are looking to invest in Florida or if they're looking to purchase a home in Florida? What's the best way for them to find you?
I'm a little bit old school here. Let me give you my number. 617-529-9317. I'll say it again. 617-529-9317. Just send me a text or give me a call, right? Usually text is easy because I'll see it and then I can, if I'm on something, I can get right back to you. But I am very personable. I do Zooms with people. I like doing Zooms. And I like to listen to your story, the why. There has to be a why as a first-time investor before you begin. There has to be a badassery.
Well, that is an excellent way to wrap up this podcast. Phil, it has been such a pleasure speaking with you, and you are definitely unique in someone who's providing loans for people. For so many out there, it's a numbers game like volume, and you are definitely relationship based, and I can see it oozing out of every pore. And I just am truly appreciative for you being here today. Thank you so much.
Thank you.
Absolutely. And that is all. Thank you for listening. We will catch you on the next episode. Now go out there and share your badassery. And don't forget, make it a great day. Take care. Bye-bye. Whoop, whoop.
Thank you for listening to RAIN, the Real Estate Investor Growth Network. Be sure to subscribe on your favorite podcasting platform so you never miss an episode. If you need more badassery, you can follow Jen Josey by visiting therealjenjosey.com or become a member of RAIN by registering on rainmastermind.com.